Risk management extends beyond insurance, encompassing comprehensive strategies for financial resilience. This includes the establishment of legal structures such as trusts and LLCs, which shield personal assets from unforeseen claims and creditors. Diversifying investments beyond traditional stocks and bonds, consider real estate, commodities, and private equity, reduces market volatility impact and fosters stable income. Managing debt effectively by minimizing high-interest obligations enhances financial freedom and flexibility. Healthcare planning is crucial. Beyond basic Medicare, explore healthcare savings accounts and long-term care insurance to cover unexpected medical expenses. Income diversification through avenues like rental properties or annuities provides additional security against job loss or pension fluctuations. Comprehensive legal and estate planning ensure your assets are managed according to your wishes in unforeseen circumstances. Together, these strategies forge a robust risk management framework, securing your financial future beyond conventional insurance measures.
So Lynette, you mentioned the dreaded Ds. I know that that includes death, disease, disability, disasters. The tendency is to shy away from these topics oftentimes. How do you coach people to actually address it?
Well, there are some things that people have thrust upon them and that they have sort of no choice but to deal with, right? So unfortunately, if somebody has lost a loved one, if they've gotten a pink slip and have lost a job, they're in the throes of that change. And so then it becomes really a conversation about how they process that change. And, I make the point of explaining to them that change is something that often happens suddenly. It is thrust upon you. And for a lot of people, it's jarring. But transition is something different. Transition is how you process the change that has happened externally. And transition is something that happens internally within you. And it takes a long time. It might be weeks or months. So many times we don't have to ask people to, kind of talk about it or to get there because they've already encountered it. Now, there are some things where you absolutely do need to have those conversations, whether it's natural disasters, planning for potential death, or even a divorce that somebody knows they're in a rocky relationship. And then you do want to have those thoughtful, timely conversations. I think the best strategy is really around asking questions, asking about potential risk factors. What would you do if one of you lost your job? What would you do if you were separated from your spouse or your spouse passed away? How would you handle it if a natural disaster struck? You live in an earthquake-prone area or a flood zone or a area that's prone to tornadoes. What would you do if one of those natural disasters struck? So just starting the conversations with questions tends to prompt people to say, ooh, yeah, I'm not exactly as covered as I think I probably should be. Your audio, Andy.
I was muted because my kids were leaving.
Oh, okay.
I wanted Denise to continue what she was saying earlier. Talk about insurance as a hack.
Well, it's the way to see it is you contribute your premium to having access to a larger pool of money. That's really what it is, right? On the simple basic structure of insurance, it's basically a lot of people crowdsourcing, almost like a GoFundMe, all the small contribution per month into a pool. And then when someone needs it for a qualified expense, which is what the insurance has been defined to protect, then that is when you would raise your hand and say, I need something. That's a claim, right, that you make to the larger pool. And this is just a way to shore yourself up against any financial risk that is associated with whatever you're shoring it up against. So in that way, that's how I see it as a financial hack. You can look or appear to be a wealthy person in the sense that when something happens to you, it doesn't destroy you financially. And it's only accessible through insurance to be able to have that experience, as opposed to just being completely screwed when you have an accident or go through something, And so that is what I mean when I say insurance is a hack.
No, it makes sense.
And Andy, you probably know better than all of us about other, ways in which people use insurance as a hack in terms of fully funding life insurance policies and then being able to tap into it and kind of borrow against it in a tax efficient way. I know some people do that, as a kind of as a strategy as well.
Yeah, there are a lot of insurance products. One is an annuity, which I think unfortunately is too often sold to somebody who doesn't need it. But in my opinion, it fits for people who have longevity risk. Like you can purchase a policy that gives you guaranteed income, and the longer you live, there's a point where you benefit, and that can help a lot of people, especially when analyzing what are your expenses in retirement, and then if you have a level of income, guaranteed income, that can bring you peace of mind. I wanted to ask Tanya, finding affordable health insurance is one of the biggest challenges of the FIRE lifestyle. Can you give us the real lowdown?
Yeah, I think the reality is that it's probably better than most people think, and the reality is also that it's actually pretty easy to find out. You can go onto healthcare.gov, or your state may have its own healthcare exchange, and you can put in sort of imaginary scenarios. So you can say, I think I'm going to retire in 5 years, and at that point, we expect to have an income of X amount, and here's our family size, and the ages will be, and then it will tell you what that health insurance will cost in your area, and then you can plan for that. I do think it's good to plan for it to go up faster than the rate of inflation, because historically it has. Even in these last few years of pretty wild, out of control inflation, healthcare has still exceeded that. So it's good to model higher healthcare spending into all of your healthcare and financial planning. But the fact that we've got this great tool out there to let folks know what they can expect to pay, I think is a really great thing. Honestly, it's the thing that makes the entire early retirement movement possible, or work optional movement, as I think of it. Because before we had the Affordable Care Act, there was really no way that most individuals could even buy health insurance. It wasn't an option. So it's a great thing for people who want to retire early, for people who want to freelance, for people who are out of work for an extended period through no fault of their own, and they're just looking, it's great to have access to it. And a good thing to keep in mind also is that the income that counts for it is only essentially your taxable income, if you think about it that way. So if you have investments and you're living off those investments and you sell shares, it's not counting the whole amount that you sell, which might be what you're living off of. It's only counting the gain in value, or the capital gains as the income, and your cost basis, what you originally paid for those shares, doesn't count in that income. So for a lot of folks in the early retirement scenario, especially, your income on paper is going to be lower than what you actually have to spend. And that, I think, is really helpful to keep in mind, because that's something that a lot of folks forget. And at least right now in the US, we have pretty good tax credits that you get for insurance. So a lot of folks have more to spend than they technically earn, and therefore look relatively low income on paper. But I think even for folks who aren't in the early retirement or work optional sort of path, just knowing kind of, okay, if I was out of work for 2 years, what would my health insurance cost? That's just really good information to have. Sometimes it can be a wake-up call, and sometimes it can be a reassuring thing. But I think it's also good to think about insurance as beyond products, as being things that you can build into your own plan. We think of it as contingencies in ours. So knowing that, okay, right now we live in a very high cost of living area. So if suddenly all of our investments were worth a lot less and we couldn't sustain our lifestyle, one of our contingency plans is we could sell our house and move to a lower cost of living area. We don't want to do that. California is great for us for a lot of reasons, and is actually very tax favorable for people who aren't earning a ton. Plus, we believe in taxation and all the things it pays for. So that's a whole other issue. But it works really well for us. But that's a contingency. We also do have one rental property, which we're not big into being landlords, but we bought it really to rent to a loved one who didn't have other good options. But we know that in a pinch, we could sell that. So things like that can also be forms of insurance that aren't technically a thing you buy and pay a premium for, but give you added security in your life. And so that's one of the reasons I tell people it's not always good to plan around your most bare bones budget and live in the tiniest house you can possibly have in the cheapest area, and have the lowest possible expenses, because then you have nothing left to cut. And having some things left to cut can be enormously valuable and also really give you good peace of mind so you can sleep well at night.
And you can live better.
Yeah, and also that.
Until you have to.
Quality of life, yeah, for sure. Yeah.
Lynette, did you have something to add?
Yeah, I was just going to add, just on the health insurance front, I think there's one other strategy that I would recommend to your viewers, because healthcare is so ridiculously expensive. Today we had, CPI numbers came out, and healthcare medical costs were among those that were up, yet again. But I think that for people who are working, one strategy that I think is vastly underutilized is going through unions. If you happen to be in any field where there's a union, you might see if there's something available for you on the healthcare front. So take moi, for example, myself as a case in point. Andy, you mentioned that I did, 1,000 TV interviews and done TV commercials and all that good stuff. And yes, that's true. But here's the thing. Obviously, the TV side is one element of what I do, but I actually do get paid to go on some of the TV stations when I'm doing my professional work. So if I'm doing talk shows, for example, I'm getting paid. And I'm a member of a union, which is under the AFL-CIO umbrella, and the union is AFTRA, SAG-AFTRA. So as it turns out, because I do a lot of media, I earned enough to qualify for union-provided healthcare coverage. And it was a phenomenal healthcare savings for myself and my family. Because before we were paying, at one point it was 1,000, it went up to 1,200, then it was almost going to be about $1,500 per month, literally for three of us, for just myself, my husband, and our daughter, who's now 18 years old. Long story short, I got my healthcare this year is through my union, and it's $250 a month. So it's a huge, huge savings for us. And I was able to even add my son, the 24-year-old who's already graduated from college. But because of his age, he was able to be put onto this healthcare plan as well. So it just reminded me that, folks should ask, even if, you might not think of a direct relationship or a union in your field or line of work specifically, you might say, wait a minute, I do have a membership or an affiliation here, and maybe it's worth me exploring whether or not they offer healthcare coverage.
What a great tip.
That is a great tip. I'm tempted to go into acting now.
Hey, save yourself some bucks there.
You can get into SAG-AFTRA if you read your own audiobooks. Fun fact.
Yep. That is true.
Have you done that?
I have, although I looked at what the union dues were going to be. And in my case, they didn't make sense. But Lynette, you do a lot more television than I do. So.
But you did the math.
And that's what counts. And by the way, for anybody who is, kind of interested in that type of thing, there's a ton of things, writing, editing, producing, on camera, voiceover work, commercials, social. There's a litany of categories that are covered under that umbrella. So if anybody does, performance type of things, I think it is worth investigating. And I'm a huge proponent of the union and unions in general.
Great tips all around. Let's go to segment 3.